We're going to do a little all access at the end.
You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. I'm here at my corporate partners in Baltimore in freezing cold weather, walking to work. We get on here live every day the market's open, 11 a.m. Eastern time, go over the market, share some thoughts. Once in a while, we'll even share our trade of the day. I got the chat up in YouTube. Hey John, how are you? Giuseppe, thanks for joining. Matt, Bill, Siri, thank you all for joining. A couple of topics to cover today. We're going to talk about MLPs. I want to talk about high volatility stocks and how their options are priced. We're going to talk about Joby, and then we're finally going to talk about Natty Gas. So all week I've been at a presentation with a bunch of analysts, and I want to go over some of the key findings from those last couple of days, and that's going to be MLPs. We're going to talk about Joby, and again, Natty Gas. A lot of people are getting bullish on Natty Gas down here. So let's go to the charts. I got the chats up. So if you got any questions, guys, feel free to ask. Hey, Giuseppe, awesome. Okie dokie. I got you in front. My slide deck, a little bit out of order, but that's okay. In front of us, this is a chart between the NASDAQ and the Russell. Now, in order to analyze these two, we have to look at 2 Russell for every 1 NASDAQ. Going back 5 years, right now, NASDAQ is so obnoxiously expensive relative to the Russell. Maybe that's because it's the end of the year. QQQs, NASDAQ tech stocks are really strong. Small caps are weak as can be, but this will fix itself. I don't know if it'll fix itself before the year's up, but just like we had in April and July, when the NASDAQ was outperforming the Russell, that quickly fixed itself. And I wouldn't be surprised if the same thing happens before the end of the year. Rick, good morning. Thanks for joining us, buddy. All right, let's go on to the next slide. So I was in this conference this week, really, really bright people. A bunch of analysts are pretty bullish on natural gas. And so I wanted to pull up natural gas and look at it next to its contemporaries. So if we look at oil, we can look at RBOB gasoline, heating oil, and natural gas. That's what's in front of you right here. The yellow, 2022, natural gas was outperforming heating oil, RBOB gasoline, and oil. Well, in 2023, natural gas got absolutely smoked relative to the other 3 and has stayed weak. But just recently, starting in October, it is now taken over oil. And so lots of folks, lots of talk about bullish natural gas. How can you express that opinion in 2025? Well, let's research names that are going to rally if natural gas is strong, like many think. The next slide. MLPs. A lot of talk about MLPs, oil performing well in the new administration. If I was going to look for getting long MLPs and getting long oil, you could look at something called closed-end funds. Closed-end funds are different than just mutual funds. A mutual fund, the net asset value and the stock ticker are trading at the same price. In a closed-end fund, and that's what these are, what do we have? 7 closed-end funds. These have leverage, fine, but these are trading at like a 12% discount while offering a distribution rate, a yield of 12%, 10%. So for anybody who's interested in investing in MLPs, I'd seriously consider SRV and TYG if that's something that you're interested in. Next topic, I want to talk about Joby Aviation, another topic that a bunch of analysts like at this conference. Well, trading is about timing. And for those who want to invest in Joby, you'll notice that Joby had a really big run in November, was rallying up to about $9 and has recently pulled back. So I like the idea of Joby as it was talked about throughout the week, but it's also really good timing right now to get long Joby if that trade interests you. A little extra information on Joby before I go into the options, but Joby has been raising money. Electric vertical takeoff and landing vehicle startup launched a public offering to sell 300 million of its shares of common stock. And then separately in October, they raised another 222 million. This latest filing adds to that offering and will give Joby the chance to raise a total of 522 million as it gears up to launch commercially in 2025. Pretty freaking cool. Good time to get long Joby. Michael, hey, bud, you mentioned Lyft yesterday. Any thoughts? Any exit? No, right now, Lyft is a pretty good place to buy. Okay? It's the same thing with Joby. When we look for areas to get long, we don't necessarily look for, let's get long at 772, we're going to get at 9. We want to look for places to invest in companies, and then let's see what the market's going to do. If I pull up the option chain for Joby, if anybody's interested and wants to consider this trade, I would go out to April. You have 125 days out in April. There is quite a bit of open interest on these strikes. What you could do is you could say buy the 9s and you could potentially sell the 13s. If you buy the 9s for $1.25, you sell the 13s for 50 cents. That's a 75-cent trade. The most that you can make is the difference between 9 and 13. That's $4. So you're risking 75 cents to potentially make $3.25 if Joby trades above 13. A really sensible trade for those who want to get long Joby. I had a great question in our Discord community about high volatility stocks. So I'm going to use the example of Rigetti because Rigetti has volatility of 200%. Very, very volatile. Stock is $6.38. Now, just to show how volatile this is, $6.38. If this stock goes up 100%, that's the 12 strike, those are trading for $1. The market's expecting this name to go up 100%. That's why there's such crazy premium up here. But also realize that the 15 strike, if you bought 10 of those, that's an $800 bet. That would get you long 1,000 shares at 15 if Rigetti gets above 15. But think about what a gargantuan move that is. From 640 all the way up to 15. And if it doesn't get above 15, you're a loser. That's way, way too much. That's just too much premium. So that's an example of really high volatility. How do we play this? Well, you may consider buying a lower strike and selling a higher strike. That's one way to reduce the cost of a high volatility stock. For everybody else, Telvin, if you could throw me live, talk to the peeps. For everybody that's in our all access, you guys stay around. We're going to go over our all access portfolio. For everybody else, thanks for watching this week. This week we were busy, so we weren't able to do live, but we still ended up throwing a recording up there every day. Thanks so much for watching. If you give it a thumbs up, subscribe so you don't miss the next MIT Live. Have an awesome weekend. We'll see you Monday. Thanks for watching, guys.